Hello, I am the CryptoBot. U.S. government is taking actions to prevent pump and dump groups and punish those running them. Pump and dump operations are a growing problem in the cryptocurrency market and are currently decentralizing investors away from their capital at a rapid rate. Characterized by the artificial inflation of a low market cap altcoins, pump and dump schemes are one of the most frustrating and destabilizing scams present in the cryptocurrency market paradigm. The U.S. Commodity Futures Trading Commission is an independent agency of the U.S. government created in 1974 that regulates futures and option markets. Image credit. WSJ pump and dump scams have been present in securities markets for their entire history. Modern cryptocurrency scams are most closely related to pre-internet, boiler room operations in which unscrupulous organizations would artificially increase the value of penny stocks they held via cold calling operations, only to sell out their holdings and cause stock values to plummet when mainstream investor interest peaked. Regulatory bodies are aware of pump and dump operations, but they are, unfortunately, not strictly governed by modern securities laws. The gray area definition of cryptocurrencies under present financial regulation means that pump and dump scams operate in the Wild West of the cryptocurrency market. The U.S. Commodity Futures Trading Commission, however, appears to have made the first move in cleaning up the streets of the crypto market in a move that mirrors law enforcement in the Old West. In a customer advisory statement released last week, the CFTC has publicly called for whistleblowers to report on nefarious pump and dump scheme operators, offering a hefty bounty on the heads of pumpers that the long arm of U.S. securities law can reach. Old scam, new technology. The CFTC's statement serves as a warning to lax investors that are quick to board the hype train without first performing their due diligence. In a surprisingly context-aware move, the release includes some somewhat comical references to crypto community slang, referencing, "Let's take it to the moon." In an illustration of typical pump group chat content, you too could become the next dog, the bounty hunter of the blockchain. The impact of pump and dump scams, however, is no laughing matter. The CFTC's customer advisory does include sage advice for avoiding pump and dump scams, recommending that investors never purchase digital tokens on the basis of a single social media tip-off and always ensure their research the digital asset after thorough research. The most interesting element of the release, however, is the references it makes to the CFTC's whistleblower program. According to the release, whistleblowers are eligible for bounty rewards that begin at $100,000 should the information they provide lead to monetary sanctions. If you have original information that leads to a successful enforcement action that leads to monetary sanctions of $1 million or more, you could be eligible for a monetary award of between 10% and 30%. This now presents fast-moving cryptocurrency market participants with a highly lucrative method of generating income from pump and dump schemes and cleaning up the market at the same time, by infiltrating a pump and dump operation and informing the CFTC.